Hello, Warriors. How's everyone doing? How do I sound? I woke up 15 minutes ago. Hi, Mike. Glenn came in.
Oh, you did a little sleep in.
Yeah, I turned off the alarm. I usually pop up and I didn't. James, Marcus, Blake, you ever do that? Ryan?
Uh, I've done it. I've done it. It's funny after like I don't know, I guess since 2011. So that 13 years living in this time zone.
Yeah,
I've done it maybe a couple of times, and I'm pretty good about just popping up, and I'm a morning person as it is, so I
yeah,
never really struggle with it too much. But yeah, I've done it. But
yeah.
maybe
Anyway,
you might need me to catch you up on a few things that have happened overnight. Or are you good?
well, go ahead. I noticed, Euro giving it back. So I was going to start off and ask Ryan, you know,
Okay, there you go.
why? Why, Ryan?
Why, Ryan? Why?
Why, Ryan? Why?
Why?
That question has been the bane of my life.
Why?
Why? Why did you do that, Ryan?
Anyway, so dollar showing some strength. Big reason behind it
Uh,
today.
no big reason, really.
Yeah.
Yeah, no, I can't find a reason for anything. End of month is the easy excuse to play, but
Okay.
it's just a back and forth, really. You've got dollar CAD up there that was looking a bit soggy. Took a small long at 136.50 last night just to play the level,
Yeah.
which bar 10 pips held. We got obviously the bigger level. I'm interested in down at 136, 135, 90, 85. Down there, maybe if we get a strong CPI number, we might get a little kick down there, chance to play the range. So that's what I'm looking at for that one. But yeah, overall, been a bit of a slow morning, mate.
Okay. And the wick-off pattern or is it Wyckoff? Wyckoff pattern that Blake's looking at could still be developing here. Nothing, what is stopping the end from just taking this high out? I mean, we've been here 2 days and it's only
Yeah.
70 pips away. There's been, what's stopping it? Is there anything
Not
there?
a lot.
Are
I,
they,
I suspect there's a lot of offers up there. Again, might be month end, half year end, quarter related offers around a big figure. The fact it didn't tap it, it just came up 7, 8 pips short, is a bit telling. I shouldn't think there's a barrier there because obviously we've been above it earlier on in the month or so ago. So I don't think it's barriers up there, but there might be some fresh ones in, but I wouldn't think there'd be any size. Yeah, just a market not quite willing to push things too far yet.
e.g., a vibe, new lows or put in a higher low here?
No idea.
Huh?
It's stuck. It's stuck,
Yeah.
mate. Absolutely glued in the middle here. 84.80, 85, 84.20, 84. Wake me up if it goes either way.
Okay. Kman, how are you today? I'm sure you've been
Good
up
morning,
longer
Dale. Good
than,
morning, everybody.
yeah. So, thoughts, top of mind, anything you're doing in this market?
Uh,
Summer doldrums already setting in here.
I, I mean, like gold, you mean, right?
Gold?
I didn't catch it.
No, I no anything going on top of mind or
Uh,
anything you're
well,
doing in the market.
really not a lot. I mean, I'm already in end of month, end of quarter, end of semi-year
Yeah,
mood. Really short-term stuff. If I do anything, the only ones that I keep right now are a little long dollar rand, little long dollar China. I'm eyeing because we had a good few months now of end of month Swiss franc buying, and I'm eyeing opportunities there. If we would see one again, perhaps pick up some Kiwi Swiss again or so. For the rest, it's it's really running from one fixing into another now, I guess. Saw a bit of demand in the euro in the early European morning, but that was quickly going away as well. I think there we still have the overhang of the upcoming French elections. I'm going to be relatively interested in what gold does if it comes anywhere closer to 2300. I I'm half thinking it may be a decent position for a start going into the Q3 this year, being long a bit. But it's going to be a relatively easy stop if you get back below 2270, 80. No reason to stay long probably. But
Okay.
yeah, that's kind of what I'm playing with right now.
Okay. Because I know some people that are looking for under 2280,
Oh yeah,
but
it's
but
very
but that
possible.
it's a buy under
Oh,
2280.
to buy under 2280, yeah.
Yeah,
I mean, it's all
like
about levels and
40.
when it goes there and what it does when it gets down there, right? Yeah, I've
Yeah.
seen a few people also call it for a move down below and then the bounce starting. We will see.
Okay. Why don't we move to risk? We actually had 2, 3 days down. Well, three, and bouncing back. Uh, I'll go to Blake. Would you sell a rip off this little hold that we have going on here in risk, Blake?
I don't know. I still think it's a little. I still think it's a little early. I want to see how Nvidia acts today. Nvidia's up. It's up and trading at 120. I think this morning it's trading up several percentage points. And I think that's it's interesting when you see bear markets, Dale, and we were talking about it in the ForexAnalytix community and how
Up to.
long it's been. Yeah, you can see Nvidia right now
Yeah.
pre-market's up, a little bit. Uh, so if you guys don't remember what a what a bear market looks like or is, for those of you that aren't old enough to remember, it's watching when things gap up in the morning. As soon as if they get smacked down and fill the gap, it's a behavioral thing, right? Just like bull markets are it's very Pavlovian. Oh, stocks are down, great, let's buy them, and then we're going to end up the day higher. The dynamics shift, and when they shift to a bear market, then it's like every time you get a gap they slam it back down, and it fills the gap. So what happens is every buyer loses their loss of appetite to buy, and then that's how a bear market eventually forms. And so I'm looking forward in Nvidia and seeing how these gaps react in the morning, and if you start filling those gaps pretty quickly, and that happens consistently over the next couple of days, that's when I start looking at the broad markets and saying, all right, well, here's some of the leadership that's starting to really just get smacked every single day, every single morning. Buyers will lose their appetite, and that Pavlovian response of buying higher after it's dipped a couple percent,
Yeah.
those buyers will lose their appetite eventually, and that's how market dynamics shift. So to ask if I'd be buying or shorting rips right now, not yet. I'm still a little nervous. We are starting to see some signs though. I mean,
Yeah.
that you got European equities, you got the DAX that's sitting on flag support, you got the CAC 40 sitting on flag support. Those markets look
Heavy.
they threaten breakdowns now. So
Yeah. So remember, I was waiting for one more high in Amazon to give me a three. It happened
there it is.
yesterday. It didn't make a new high, missed it, 9170 and 91. But my saying close enough for government work. It
Yeah.
has the look. And the other one was XLF that it hasn't gotten there yet. You need it over 42 and a half. And the first one was the Dow. And, the Dow rallied while the rest of the market was off. That didn't get there either. And I remember saying a long time ago that, I would sell a fib retrace in the Dow. I'm here. You got it here.
Yeah,
So I think
actually,
this is,
can I show you that? Well,
yeah,
when you're
I'd love to
done,
see
I'm
it.
gonna show you the Gartley pattern developed there.
Oh, I'm done. I mean, I covered everything. The only other feature that we're getting that's kind of changed directions is WTI.
Yeah,
We
and
started to
that's a
go ahead.
market that you got to watch because all dips have been bought.
Yeah.
Yesterday we dipped to 80 and change and then ripped to new highs. So I
Yeah.
would, but we're stalling at a 618. Let me show you
Go
though.
go
Go
ahead,
ahead.
buddy.
Okay.
I'll
I
stop
was going to
sharing.
show you guys well, first of all, if you go into the ForexAnalytix chat room, go into the S&P room, and you'll see this is the Gartley on the Dow. We mentioned it yesterday as well
Oh,
before we
cool.
got there, but you
Yeah.
can see we came real close, Dale. It's close enough for government work, right?
Right. Yeah.
Right. So that's a perfect Gartley, by the way. Literally perfect Gartley, like from a number point of view. But that's the ForexAnalytix chat room if you guys, are in there. But I wanted to show you real quick a
Great
few
look.
things. Let's start with crude oil. Because you were talking about crude, and we are stopping at the 618 retracement. That's like probably the most important development. You can see the 618 retracement, but you see the dips right back to 80 like yesterday. Just find buyers. And you have to go back even to middle of last week. You can see, whoops, that's not what I wanted to grab. You can see middle of last week, these dips are being bought. Now that doesn't mean that it's gonna break out, but I would be a little nervous if I was short crude. And we've talked about it here. There is, if there's one thing that can push the economy globally over the edge is higher energy costs. And I don't know what would drive crude oil higher. I know we could always point to geopolitical
Yeah.
events that are happening around the globe, but has it really mattered? I mean, I could
Not
go
yet.
back the last 2 years and talk about the Strait of Hormuz and then the
Ukraine.
conflicts that we've seen, yeah, all over. I mean, it's like the market doesn't care, but maybe it doesn't care until it does, and then at some point maybe it does care about something that is actually developing, but that's geopolitical. But right now, I don't know what's going to push it above 82 because I can't imagine it's demand. So I don't know. I
Yeah.
mean that
So
would
I
just
mean that's a
my
great
thoughts on it.
spot for attempting a short. And you know what? Even if it is a bull market, that's been one heck of a move from 72, $10. Why can't
Yeah.
it pull back $5 here?
Yeah, I mean it
You know?
could. It
Yeah.
could.
So
I mean on growth concerns, maybe I don't know. I mean, but
you have
yes,
a place for a stop
if you
here,
want as a
right?
trader, that's all we care about, right? If you want
Yeah.
to short it and you're like, okay, I know above $82 I'm wrong. Yeah, I
I like
mean,
that trade.
yeah, there you go. I mean, that's it. I would look at the other way if it comes back down here and it holds 80. I'd probably get long with a stop just below 80 if I was going to be trading it because you can see how it's just holding up. So
Yeah.
but there's two ways to play it. And right now we happen to be right in the middle of this little range. So if you want to play it inside of the range, I would wait till you get to the fringe, either get long down here close to 80 or get short, closer to 81, 85 if you can get it. Which North American trade always tends to bring in a little bit of volatility in crude oil. And I also wanted to point out one other thing that I think is worth noting today is yields. Take a look at the 10-year yield here and notice
Breaking
how
down.
we're getting really, really close to triangle support, channel support, whatever you want to call it. But take a look at the 10-year and trying to break down through a triangle. So this is one of those
Yeah.
things that I don't know if it's going to put some downside pressure on the dollar. But how many people have been betting against the bond market? It's do you watch YouTube videos and subscribe to YouTube channels? Dale, anybody?
I watch a couple
Yeah,
on
I
and
watch a
off.
few. I watch a few too, and there was one that was like a Lynn Alden
Oh,
uh show or whatever, and it happened to be 5 months ago or 6 months ago because it was like an old one, like it's like they sometimes throw out old ones and you're like,
yeah,
in the markets it doesn't really matter. But there was one with Luke Groman, who is a
yeah.
guest here, about he was saying that a very big bearish breakdown in the bond market was happening. This is 5 months ago, and 5 months ago, you think about where we're at. 5 months ago, we were over here. We're about at the same place now. Grant, we did see a sell-off here, but I think the market really has been expecting the bond market to really collapse. So much supply, and we know that the positioning is very bearish for the bond market, but look at how close we are to breaking out to the upside.
Yeah.
And I know you've been talking about TLT the last few weeks about it breaking higher. And I think we've really got to start thinking about, yeah, you've been right, Dale, but you can end up being really right. You know what I mean?
Yeah.
Yeah.
Well, I think so. I mean, there's some smart guys that, their big bets are on the bonds. David Rosenberg, Gunlich, Hugh Henry, a lot of guys that, uh, were early in the bond market, but Rosenberg is looking for massive disinflation and, risks to fall apart. He's been looking for that for a while, but the bonds, I think, are starting to say a little something here in the last couple of weeks. I mean, a week doesn't make a trend, but it's almost like they're starting to behave like they used to, that when the market's under pressure, people are going to them again.
And that's
So,
that's the thing. And I think that's what we've got to see what's happening below the surface. And I think a lot of it is, yeah, you got the bond market perking up. And what's interesting, Dale, is when you get the bond market perking up and the dollar's perking up at the same time, because everybody's like, oh, bonds are moving higher, so yields are going down, dollar's going to sell off. That's the again, Pavlovian response to the market. But when that doesn't happen, you got to take a step back and go, wait a second, wait, you got the bond market that's strong. You've got the dollar that's threatening an upside breakout. We're getting close.
Yeah,
you've got gold that's, as you guys were talking about, still holding up. I would argue that this is a bullish consolidation in gold. You got these asset classes that tend to act really well in a risk
and
off
they're risk off. They're risk off asset classes, or or
what
at
if
least fear.
What if the yen starts catching a bid, right?
Yeah, there you go. That would be it.
And you were talking about really quick, and I know we haven't seen the yen strengthen in a risk off environment, but let's not forget that they happen to be the only central bank that might be raising rates. Maybe Australia. We'll see about that. I kind of doubt it, but they were obviously discussing more rate hikes versus rate cuts at the last meeting with Michelle Bullock and company. But again, we talked about the old I'll bring it up again. The Wyckoff, you mentioned it this morning. I mean, I don't look at the dollar. I'm not going to look at the dollar yen for a Wyckoff accumulation or distribution pattern. I'm going to look for a Wyckoff accumulation in the 6J, because the 6J is going to be a little bit more representative. There's your selling climax, high volume sell off and reversal. This is your low volume sell off right here. So as long as we, even if we breach new lows, but it's still very low volume, then this is a Wyckoff accumulation pattern developing in the yen overall. So it's just something that I'm keeping an eye on as far as the 6J goes.
Kman's been saying for months now that volatility and certain things that haven't happened, that could have happened, to look towards a quarter that we're about to enter for more volatility and more risk to come into the equation. Am I quoting you correctly, Kay?
Yeah, that's what I said. Yeah, first quarter and then part of the second quarter, the return of the dollar, and then the rest of the second quarter, perhaps start of the third quarter, a messy one.
Yeah,
and
messy.
This is about what we are getting, isn't it? I think we are going to start to see a bit clearer, and I'm going to repeat here is that I think that the Fed is working on a more narrow ridge than what the market wants to believe right now. I think they could turn faster, and if we get then a double whammy, for instance, the Bank of Japan hiking and reducing bond buying at their end of July meeting, the picture could change a bit. But for the time being, I still try not to go against this yen move because it's just costing too much money in the short term. The only thing we can hope for now is still interventions. If you look at the rest of the, if you look at those crosses in the yen, they are just too big. And I'm going to voluntarily omit the euro yen because the euro is struggling with other stuff. But if you look at the rest of the
look at
crosses,
the
they are
New
more
Zealand
big.
yen. This is actually the 2000. This is pre great financial crisis
Yeah.
highs, which
Yeah.
is crazy.
Wow.
Yeah, and then look at the Aussie yen. We are at record highs above 105.
Just
Okay,
crazy.
no, well, not completely record highs, but again, we are at highs. No, what I meant is we are higher now than when Abenomics got called into life, which is kind of telling a story on its own. Well, that's where and why those Japanese officials are so nervous about everything right now, because they are not only struggling against the dollar, they are just struggling against the rest of the world.
Yeah, and you can clearly see that obviously in the 6J. I mean, this is just a bearish breakdown. I mean, although I'm looking at it as a potential accumulation reversal, that there isn't, we haven't seen the definitive signs of the reversal yet. So, you
But
know,
have you not had the same pattern in 2021? If you look at how it looks in 2021,
oh yeah, this would be a bigger
2021.
version of this. Yeah, potentially. I mean, yeah. Yeah, but it never got the reversal, and that's where we need to be really looking for it. So,
But the biggest reversal that we have had so far, post-pandemic, let's say post-pandemic, the biggest reversal that we've had was when the US inflation was coming down. That's the only way that the yen went stronger, from 146 down to 128. Yes, the Bank of Japan intervened just before, but that would never have worked without US data coming down. And that's what I still think is part of the yen strength, if it has to become longer than just a few sessions, is that the rest of the world needs to slow down, and then your yen can lastingly strengthen. And until that happens, I think unfortunately the speculators will still have their say, because they're getting money to be short yen every day, right?
yeah, they are, and the carry is still pretty significant. Have a couple other things. I think everybody, it was on everybody's radar yesterday. We finally closed out our pattern in play in the Bitcoin market yesterday. You can see it in Bitcoin as it got to 60,000. It was a really key, I think, a really key hold in Bitcoin, because you can see we have like this, it's a big cup and handle pattern. I blogged on it yesterday, but this has really got a hold. I mean, for the bulls, these levels. If they don't, we start getting below like the 55,000 level, I think it's going to open up some downside. So, I got a message from a friend yesterday. It was like, hey, do I buy Bitcoin down here? I'm like, because he's in the camp like, oh, well, Bitcoin is only going to go up, no matter what. And he's like, do I buy Bitcoin here? And I'm like, yeah, I mean, this is the place you're going to want to buy it, but you have to be careful, because if stocks come down for the reasons of, we're, seeing some profit taking, or, not the economy is slowing and things are going bad, you got to look at Bitcoin as an investment, a Wall Street vehicle, and investment. And it's something that has been put on in recent years by a lot of institutions. So I look at a lot of these as FIFO, first in, first out. People are going to turn around and go, Yeah, you know, I bought Bitcoin on the new ETF when it was, you know, in the 50, if it were around 52,000 or whatever it was. And I still want to keep, my my Broadcom, or, you know, Amgen or whatever else I've got. But let's sell this, you know, Bitcoin ETF. You know, we made some decent money in that. It's a Wall Street vehicle. It's going to be used as a high beta risk asset. Now, if the market is selling off because there's some sovereign default, or whatever, then I think Bitcoin, you know, could actually rally in a situation like that. But you got to be careful with Bitcoin, and I think it's going to be at a pretty key level for the market to be watching around the 60,000 mark. So I just think we need to keep an eye on it. Hey, Ryan, since we haven't heard much from you, I know you just got finished doing the trade-off show with Michael Brown. What are you thinking right now going into today?
Just going to be watching the data. We got, aside from the Canadian CPI up in a moment, we've also got Philly Fed services, and then we've got the conference board consumer confidence number. There's all important inflation readings as well. So that's going to be, we're back into data watching. So, you know, whichever way the data goes, the market will sure follow.
I'm interviewing Danielle DiMartino Booth today about the Case-Shiller house price index, and then also about this conference board. So you'll find that interview here on Trader Summit, just so you guys know. I will be interviewing her later today. And I know I told our ForexAnalytix subscribers yesterday, I am going to quiz her a little bit. You know, I'm going to ask her, when does macro matter? Because you know, people have been, you know, pretty downbeat on the U.S. economy for a while, and it hasn't really mattered, right? So,
Yeah, she's been one of them.
oh yeah. So I'm gonna you know, talk to her about it, and you know, say, hey, you know, set us straight. What's going on? You know,
Be a journalist, bro.
I'm not a journalist, but I will.
No,
As a trader, I'll be like, hey, look, I was positioned for some downside in the economy, you know, last year, and didn't come to fruition. So when is the market going to pay attention?
Yeah,
So anyway,
any chance I get, I try and bring out the Ted Baxter in me. People don't know him.
No, but I'm assuming he's a hardcore journalist.
Mary Tyler Moore Show, Ted Baxter. Go check him out
Oh,
on YouTube.
the Mary Tyler Moore Show. Now I haven't seen that since I was a kid. Hey,
All right.
Angela, you
I think
asked.
Blake, you're a bit more of a Ron Burgundy, aren't you?
I'm more
What's
of a
that?
Ron Burgundy. Yes, I am.
Oh yeah. Yeah, he
So
was from San Diego.
he was, yeah,
Yeah.
the infamous Ron Burgundy. Hey, Angela, you talked about this Euro Aussie. The only thing I'm going to say about that is I agree with you if we start breaking higher, but we do have a lot of risk this weekend, obviously associated with the Euro.
She's a
So
good trader.
got to be, yeah. She was in our community for a long time. So yeah, we miss you there,
Yeah.
Angela.
Yeah,
Hey,
get
real
back in
quick,
there, Angela.
Kman, what are you thinking before this this Canadian data comes out?
Continuation of the slippery slope in Canada, which would comfort the market in looking aside from oil and trading the Canada on its own. That's what I would be looking for, because McClem is still trying to be quite dovish. So if those data give the market what McClem is saying, it could accelerate the Canadian dollar perhaps a little bit to the downside. And the rest, from now, apart from what I said earlier on some of the metals, and but conditionally, and we got to be a bit careful. I'm still nursing that dollar rand and the dollar China, and for the rest, I'll be trading with the clock in my hand from now until the end of the week.
All right. Remember it, as Kman's mentioning, it is end of month, end of quarter, end of Armageddon, end of stock market rally, end of gold's dominance, end of what else are we ending?
It's Armageddon with it.
All right. Hey, data's coming out in just a few seconds. We got about 30 seconds. And guys, I'm gonna just say this: the dollar MEX held the 38% retracement and April spike highs at 1790. Got to be a little careful with that. It's firmed up, and we do have Banxico this week, so there's that. George says, and end of the world. Yes, we got end of the world coming. I'll tell you what, if you lived in Phoenix, Arizona, you would think it was scorched earth sometime. Here we go. Whoa, 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 whoa,
Yes.
whoa, whoa.
Hot,
Holy
hot, hot.
Stickier, stickier.
sticky, 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 sticky. Wow. That was instant. Canadian response. Look at the EuroCAD. And you know
But
what,
right to
guys?
major support at 36. That's the breakdown if we take it out.
Yeah, I mean, well, yeah, it's a big, you can see
It's
all
a
the
pin.
circles here. It's a big one.
Yeah.
But if you had a bid at
Coming back.
136 10, you probably got whacked and you're like, wow, that happened fast. Big support, guys. And I've been warning you on a daily basis here. Positioning is really skewed. Everybody is talking Canada's going to hell in a handbasket. Everybody is positioned short Canadian dollars. And I,
Not me.
think that we're going to trade lower before higher. I believe that all these longs are going to get out, and then we're going to be able to get long down here. I know I say it every day, but this higher inflation data out of Canada is not going to help anybody who is short Canadian dollars right now. So anyway, just some food for thought there, guys. Remember, CFTC positioning, go look at it. Historically, almost in the history of all CFTC positioning, there's more Canadian dollars speculators short now than there has been almost ever. So there you go with that. All right, and that would feed into Dale's break of 136. Anyway, guys, I want to thank everybody for being here with us. Make sure you join us in the ForexAnalytix community. It's $1 for 10 days to jump in there. And then you can be in here chatting with us all day long, and talking markets and talking the Euro 2024. Why we're not talking about Copa America, I don't know, but the Euro 2024 brackets are in full swing, and the conversations are full swing around that too. So, Dale,
Enjoying the soccer. Starting to like the game.
oh, it's wonderful, wonderful,
Yeah.
and it's
Great game.
football.
Yeah.
Silly American.
So anyway, I mean, it's all right to convert me, hardcore U.S. Football fan. So anyway, it's helping me pass the time when it's 1:05 out here. Okay, we have the vixologist with us. Jim Carroll's with us. Jim, welcome back to F.A.C.E. You put out a tweet. What am I going to talk about? And you came up with talking about dispersion. So welcome back to F.A.C.E, Jim.
Oh, hey, Dale. How are you?
Yeah, good to see you. You got some responses on X about talking about dispersion. A couple of people, that's their thing. So and you always take the time and effort that we appreciate to come in with a presentation, because I guess it's difficult just to talk about the VIX, which has been, pretty much in the same pattern of moving sideways for what, a decade now. So thanks
Sometimes
very
it
much for
feels that
being
way.
here.
Can you see
Yeah,
my slides?
got it. Still
Okay,
no
cool.
fear here.
You know,
And go ahead. And you're the company that you're with now, Balastrock, so people can, check it out.
my email address there, and on as Dale pointed out, on Twitter X, I am at Vixologist. That's probably the easiest way to follow me.
So,
Yeah, so
what does Balastrock do? They only deal with credited investors or everyone?
yeah, we are a boutique focused on high net worth investors, so accredited, qualified,
Okay.
that kind of folk. And we do, we cover both public markets and so-called alternative investments or private markets, private credit, private equity, venture capital, all that good stuff.
Okay.
So, we think we're building better diversification into client portfolios. And that's the
Well,
commercial.
they have you there, so definitely you're going to, be able to turn their heads towards something if the VIX is giving you messages.
I'm certainly going to try. We have yes, we have a plan for that.
Before we get started, are there any signs, we're wrapping up the second quarter, that the second half of the year will not be as restrained with volatility?
I'll show some things in the slides.
Okay.
Right now, the answer is no.
Okay.
So why don't we walk through this?
Okay.
And you will stop and ask questions whenever you feel like it.
Okay, let it roll, Jim.
So 2023 was the year of no fear in equity markets, and so far this year, we're still showing no fear. We haven't had the VIX close above 20. In almost we're almost 6 months in, got a few days left, and VIX has not closed over 20. S&P has not had a 2% down day. We'll get to dispersion and correlation a bit later, but equity correlations are in the gutter. I'm seeing echoes of 2017, which was the record low for volatility in history. And I'll show you where I'm seeing that. And meanwhile, I think it's important. You guys were talking about TLT and bonds. We're still seeing bond market volatility kind of more elevated than equity volatility. Okay. So the VIX, this is going back to COVID. And what you can see here is all the way on the right side of the chart is year-to-date 2024. And, we had a lower high and a lower low. So, the trend is down. Just, no two ways about it. Here is a look, year by year, high, low, and average for the VIX. It looks familiar. If you go back to 2017, it's not as low, but a very narrow range, and the average is down.
Okay.
Again, we have not had the VIX close above 20 so far this year. 2 years in, relevant history, we've seen that before, 2005 and 2017. We'll talk a little more about, what the back half could mean. Again, looking at streaks of VIX below 20, this does not stand out yet, at least, going back in history. We had a very quiet period, 94, 95, the middle of the aughts, leading into the GFC, and then 2017 had a very long stretch. Will we get there again? Hard to know. Plus or minus 2% daily moves in the S&P. One so far this year.
Wow.
And that was an up day. Now, intraday, we've had some plus or minus 2, but on a close-to-close basis, we've only had one day that was more than a 2% move, and that was a 2% upside. So, it's just quiet. My other streak chart, streaks of S&P without a 2% daily move. If you cut off the left half of this chart, we're closing in on the 2017 streak.
Yeah.
But, in fairness, if you go back, we can see this happen for a very long time. 900 days back, 04, 05, 06, 07. That was crazy. But we've gone 336 trading days without a close down more than 2%. Realized volatility mirrors implied volatility. No surprise. If you don't have any realized volatility, it's hard for VIX to get up off the floor. And, again, we're a little higher in terms of the range than we were in 2017, but again, very narrow, and it's been going down since 2022. Looking at the volatility term structure using the SIBO constant maturity, 9-day, 30-day, 3-month, 6-month, 1 year, we had one little scare in April when we had that pullback. But right now, this is contango from front to back and pretty dang steep, and below the trailing 12-month average. So, people are not concerned at the moment. One of the other things I look at is, when the S&P moves, what does VIX do, and how much does it move? Because we're accustomed to seeing, meaningful, and this is VIX in points, because as people should understand, VIX is a percentage. So I prefer to look at VIX in points rather than percentage moves. So this is VIX point moves per 1% down or up in the S&P. And the most interesting thing here is that the red one is, what does the VIX do when the S&P goes up the equivalent of 1%? And it's very muted this year. The VIX does not want to go down. It has settled into a range and just doesn't seem to want to move. Does that mean that it's poised to explode to the upside? Could be, but suffice to say that it's been unresponsive to the S&P continuing to go higher.
Hey, let me ask you this then, Jim. Has it been more difficult to be selling vol? Because it hasn't given up as much on up days? Doesn't offer as much potential being a writer?
It has been a little more challenging. We've had some spurts. If you sold vol on the April low, you did well. But it's been very choppy. Even with the curve in steep contango, it has been, the moves have been muted.
Okay.
Looking at the VIX futures, and here what I do, and people who follow me can appreciate this. When you look at the VIX futures, you have to recognize that they're rolling, they're moving every day. Every contract is moving 1 day closer to expiration. So what I do, and what, a lot of people in the VIX world do, is look at a constant maturity, taking the 2 front months and coming up with what's essentially a 30-day constant maturity VIX future measure. And again, this year, what do we see? We see the same story, echoes of 2017. Very narrow range, average coming down. So the VIX premium is pretty narrow.
What's amazing? In 2017, we didn't have 2 wars on in the globe, and it's the same, even in the face of geopolitical risk, that people are just completely, whistling past the graveyard.
It is,
isn't it something?
It is very, very interesting. You would expect that there would at least be more of a range in here, right? You would expect that that we'd get some jumps, but we really just haven't. And yes, and you can conjure up a narrative that says we're getting all wound up. People are looking back at 2017 and saying, hey, are we setting up for another Volmageddon, the February 2018 explosion?
Oh yeah, I remember that.
And we can talk about why that happened in 2018 and why it might be different this time. But we'll only know in hindsight.
Yeah. It's just amazing to me.
Yeah, again, with the VIX futures, So, you know, how often have they been in contango versus backwardation? And here, what I'm saying is backwardation is if the front month is above the second month.
Right.
And, you know, so far this year, we've had what?
None.
2 days in backwardation in April.
Yeah.
So, you know, it's just nobody cares. Nobody's worried.
Yeah.
So here's a picture of that term structure currently, right? July's the front month, August, September. What the hell is this bump in October? Well,
Yeah.
it's the election. So if people are concerned, they're showing some concern for the election. And I get asked the question, but Jim, that's the October VIX futures contract. The election's in November. Well, the October contract will expire on October 16th at a price equal to spot VIX. Spot VIX is a forward-looking measure. So on October 16th, spot VIX is going to measure implied volatility for the next 30 days, and that will include the November election. So the October futures contract actually covers the election, and that's confusing to some people, and I don't blame them.
Yeah.
But that's why the hump is in October.
And still projecting under 20.
Still projecting under 20, which is wild.
Really
And it has been dropping and dropping and dropping. You know, the term structure has just been, you know, stair stepping down all year.
Well, that's because my sister has it figured out. She's going to get out of the market in October and then get back in after the election, and she's going to have it perfectly timed. And she's John Q. Public, so I think a lot of people are thinking they could just ride the market until the fall and get out before the election, just re-enter after the election. Now, if it's that pat, Jim, I'm gonna just throw away all my charts.
Well,
if amateurs can get that right.
You know, I'm on record having said that the October contract price is wrong, but I don't know which direction.
Okay.
Right? Because,
all right.
You know, if we do we have a contested election? Do we have, you know, you know,
martial law?
Yeah. You know, do we have chaos and massive disruption?
Unrest. Yeah.
You know, I don't know. Or do we somehow pass through this relatively peacefully, in which case, you know, if all hell breaks loose, 1855 is cheap. And if there's a relatively calm transfer of power, assuming if there's a transfer of power,
there you go. If there is,
you know, I don't know who's going to win. I mean, the betting markets are all saying Trump's going to win. You know, we'll find out. You know, the price is wrong. I just don't know which direction. So you know,
so that kind of fits with my sister. Like it's too pat.
Yeah.
The number is just too pat at 1855.
Right. You know,
because it's not extreme either way, really.
So there's an option. There's an option trade in there somewhere, but I'm not your guy.
Okay, Jim, you are my guy.
Now, you know, being the volatility nerd that I am, I also look at volley, which is at the money implied volatility. Some people, and I'll come back to it, but you know, VIX measures option prices, you know, for a strip from out of the money on the downside to out of the money on the upside, and comes up with a value for VIX. What Scott Nations said a bunch of years ago was, tell me what at the money volatility looks like, because I don't know what to do with, you know, puts and calls that are, you know, 5 delta and trade by appointment only, but they're included in the price of this VIX thing. Interestingly, volley tells, you know, the same story. Narrow range, average coming down, and looks more like 2017 than anything else. Now, one of the reasons I like to look at volley is because I can then look at the spread between VIX, which is, broad strip of options, and volley, which is only at the money options. And it's a measure of skew, right? Because if they're exactly the same, then that says that, all of the weight in VIX is at the money. And to the extent that VIX deviates from volley, it's a reflection of those out of the money options influencing the value for VIX. The narrow range says that, investors aren't paying too much attention to at least deep out of the money index options. Because this spread, again, like everything, if there's a theme here, narrow range headed south. And we're seeing that again here. And I'll give you a visual of it. This is what I call the fear spread. And these things are moving relatively in lockstep. And the fear spread, is just stuck in the twos. Nobody seems to be very concerned at all. Another way to look at it is demand for tail protection. And again, my friend Scott Nation says, let's look at 3 standard deviation out of the money put options. If there's a bid for 3 standard deviation out of the money put options, then somebody thinks something bad's going to happen. And guess what? There really is not any bid right now. Nobody with the S&P, at near, all-time highs on a given day. Nobody is worried about it.
Yep.
Dispersion.
All
my
right.
God.
All
Andy
right.
Constant and Ben Hunt, this one's for you.
Okay.
So dispersion trading, is something that's all the buzz. All the smart kids are talking about, all the pod shops trading dispersion, which is basically looking at the difference between the volatility of individual stocks and then the index, and there are actually 2 ways to play it, right? You could be short index vol and long constituent vol, or you can be short constituent vol and long index vol. There's a trade there. It's a trade that's been around for quite a while, but it seems to have garnered a lot of attention. And so our friends at SIBO actually said, hey, let's create an index for that. So they did. And it's kind of interesting to look at the data and see, 2 distinct deviations from the norm. The first one being Volmageddon, where dispersion went to 0. There was no dispersion. Everything went the same direction. And interestingly, in COVID, you actually had a spike in dispersion because people decided, that there were some things that, they wanted to bid up, Peloton, Zoom, whatever.
Right.
And so there was dispersion between the constituents and the index. Right now, so what we've seen over the last several years is we've seen an above average level of dispersion, which suggests that, there are individual equities in these indices that, are more interesting than the index itself. And so,
like NVIDIA, like a lot of these. Okay. Got it.
Exactly. And
So
the volatility of those.
They be long NVIDIA and short the general market. That's a dispersion trade.
That's a simple example of a dispersion trade. Yeah. And
Okay.
typically, they're picking a basket of constituents that they're long and short the index against that. And that's fine as long as, particularly, with VIX at low levels, that's a wonderful trade. Okay.
It won't be with VIX at higher levels, in other words.
If VIX were to jump a lot higher, then that trade looks a lot worse. And one of the concerns is, gee, you got all these smart guys out doing this dispersion trade. we have no idea. If we go back to February 2018, it was the concentration of assets in some exchange traded funds that had to rebalance every day, and the short volatility funds and the levered long volatility funds had to rebalance in the same direction every day. The short funds had to buy to cover, and the long funds had to buy to maintain their leverage. And that, got to a point where it basically just, massively disrupted the VIX futures market on what was a relatively mild, pullback in the S&P. We don't see that in the volatility landscape today in with the exchange traded products that we have today. What people are concerned about is, under the surface, we think we've got all these guys, whether it's Millennium, Balyasny, Citadel, whoever the hell it is, we've got some unknown number of people that have this dispersion trade on all in the same direction. And if it unwinds, it could create a blow up.
Okay.
I don't know. I haven't found
Because when
anybody
you have high vol, they throw the baby out with the bathwater, right? So there wouldn't be as much dispersion. Everything might.
Yeah.
Is that true?
Well, you'd have to reset, and you might want to flip the direction of your dispersion trade. But
Okay.
the concern that people have is that if you have a bunch of people in basically the same trade, and the market starts to move against it, and the risk management guy taps you on the shoulder and says, "Hey, Dale, you got to close out your position." And if that happens 300 times
Yeah.
across the street at different places, that unwind could create some violence.
Got it.
It's really hard to know, how much of it is out there, who has it, what they're betting on. So we'll just have to wait and see.
Yeah. We'll find out.
Yeah. So another way, kind of the flip side of that dispersion measurement, is looking at correlation. Is everything highly correlated or low correlation? And so SIBO, again, in their great generosity, has given us 1 month correlation, 3 month correlation, and those are as low as we've ever seen them. And so, stocks are moving independently. We have a target-rich environment for stock pickers and dispersion traders, and it makes people nervous because, as you can see, going back again to Volmageddon, going back to COVID, going back even in 2016, that was the Brexit decision. You can have these spikes in correlation that are associated with bad things in the market. So, having implied correlation this low makes people nervous that, something's going to happen. But the flip side is VIX is in the basement. There's no bid for tail hedges. So, if people are nervous, they're not expressing it in the ways that we would normally expect them to do.
They're not putting money on their nervousness, because
Exactly.
hedging is well, don't you know, Jim, that hedging is a waste of money? And if you come out of something because there's sector rotation, you can't go to cash or you get a red card. It's illegal. You have to go into another sector.
You're not wrong.
Yeah. Okay.
Let's not forget about the bond market. You guys were talking about TLT.
Yeah. Looks pretty good.
What's interesting here is that it's no surprise that when the Fed started to raise interest rates, bond market volatility started to move north. Unlike equity market volatility, which has, come back down, there were a few minutes there in 2022 where equity and bond market volatility were both moving a little higher. Equity volatility has obviously come back down to lows. bond market volatility, continues to stay at elevated levels. People
What's
are
that tell
still,
you?
well,
People are still nervous and bearish of bonds.
well, they're certainly nervous. And so,
They have more
and
confidence in stocks than bonds.
well, and you can see it even if you just look at things like TLT, right? The moves in TLT, are anything but smooth and measured. When it moves, it's been moving harder than you might expect it to.
Okay.
And so what we've seen, unlike what we saw in the equity volatility measures, even though the range this year for move, has shrunk down and the average has dropped, it's still, significantly higher than we saw it,
Right.
from 2012 to 2021.
Right.
So we're definitely in a higher vol environment for bonds.
Okay.
So what the heck? Will equity markets continue their bull run? Will strength remain concentrated? Can it broaden out? Will the Fed ever cut interest rates? Will the dispersion trade unwind and push volatility higher? What's going on in Europe? Are there broader implications for what's happening in the elections? Who are we going to elect come November? And will equity market volatility and implied correlation remain subdued? You asked me a question. What do I think about the back half? It's hard for me to believe that the back half can be as quiet as the front half has been. But that would be the pain trade.
Right.
The pain trade would be that the bears, who are there any bears left? First of all, and if there are bears left, do they get carried out because all of this stuff just kind of settles itself without any violence? We shall see.
I think they're out there looking for picnic baskets. Yogi and Boo Boo are in Yellowstone looking for picnic baskets, and I think they're going to steal a few before they go back into hibernation.
I love it. There's another TV metaphor that you and I appreciate, and I don't know if Blake's old enough to remember Yogi and Boo Boo.
Yeah, they, they're the reasons. They're the main reason why I learned to play the short side of the market.
There you go.
Anyway, Jim, another great presentation. I think that people could learn a lot about VIX, and it's kind of like mystical science to most people. But really appreciate you breaking it down for a layman like me to be able to understand what's going on, and hang in there. Things aren't going to be calm forever. I just don't see it. I just don't see it, Jim. So I know I've been saying that for years, and we have had some interruptions, but we're in a melt up. You never know how long a rubber band can stretch, but it's stretched. And
Dale, the analogy is, we've seen this movie before.
Yeah.
We're not sure how it ends. And, these days, with Oppenheimer 3 hours long or whatever.
Yeah. Yeah.
We don't know, we know how the movie ends, but we don't know how long it is. And they just seem to keep getting longer.
Great metaphor. Yeah. So everything's okay until it isn't. And
there you go.
Really appreciate a veteran like you, the new firm that you're with. They're fortunate to have a guy like you, Jim. I'm a fan.
Well, thank you. I appreciate
Jim
it,
Carroll,
Coach.
everybody. And follow him on X at Vixologist, and check out his firm if you're a real rich guy. They have some talent. They have some talent managing money, and appreciate you being here through the years and talking about a subject that's not easy to put a 30-minute presentation together because it's been so static. So again, Jim, appreciate it, my trading warrior brother, and talk to you late summer, early fall. We'll see what's happening
Outstanding.
then.
Yes, sir.
All right, Jim Carroll, everybody.
As
Follow
the
him.
as the kids say, peace out.
Peace out, bro. Jim Carroll, everyone. And that's it for Turnaround Tuesday, everyone. Good hunting. Good join the team in 10 minutes on the morning edge. I'll see you tomorrow. Don't just count your dispersion trades, count your blessings. Adios. Thanks, Jim.
You bet.
You're welcome, everyone.